In this video, I'm going to show you exactly why I bought YMAX as a part of my dividend tree grove. You know what I'm trying to do. I take my covered call profits, we put them into a dividend paying stock, and what we love to do is get about 1,500 shares as if we were collecting them. And then what we do is we move on to the next one. We want to plant dividend trees so we have a legacy in life of passive income, right? We go out there, we bust our butt in a 9 to 5, or maybe we're trading the markets. I want to be able to stand there after all of this and have a dividend tree grove where I've planted multiple trees. And in this case, it's YMAX, 1,500 shares. And YMAX right now pays about 52 cents a share. Now, we're going to talk about why I picked YMAX and why I think it's a great dividend stock for anyone interested in the high-yielding new age of options-based dividend-paying stocks. See, most of you might be investing in closed-end funds that pay 9 to 10 to 12 cents. They might use options. They might do the buy right cover call using an index. Companies like YieldMax are stepping up the game, and what they're doing is they're using options. And they might use a synthetic trade, or they might own the underlying, but at the end of the day, they're writing weekly and monthly covered calls, and in some cases, they're using puts. But not in the case of YMAX. We're going to talk about that. YMAX right now is my favorite. I'll tell you what, I might actually look to add to this position. Remember, I was only going to buy 1,500 shares, and I did that. If you remember, we went ahead and did that. And in the month of March, we actually knocked it down. Of course, I do have 1,500 shares now, but you can see with every covered call profit, we would buy the shares. And I'll tell you what, it didn't matter what day it was, how much it was trading for. You could actually see I bought weird lots like 37 shares, 35 shares, 25 shares. It was a discipline play. I make that cover call profit, we buy the shares. That's what we do. And now I've planted my dividend tree. And this thing is going to produce some 52 cents a share every month. And you know how much that equals? I'll tell you what that equals. Let's do the math. That's going to be $780 per month. We use covered call writing to generate the profits. The profits then turned into YMAX. YMAX is going to turn into more profits, and to be honest with you, I'm going to drip invest YMAX so we buy even more shares. So let's go ahead and talk about why I invested in YMAX, and I know you're going to like it. Hey, welcome back everyone. It is time for another red hot cover call video. We're going to talk about YMAX now, and here's the deal. I'm an active, successful trader. And to be honest with you, I consider myself a professional trader at this point. And all I do is sell premium. I buy stocks, I write covered calls, we do it again and again, generating huge premiums. And we take those premiums, we buy dividend paying stocks. Now, right off the bat, many people have asked me, why am I doing this now? Why don't I take all those covered call profits, dump them back into the pool, and then write more covered calls? Well, here's the deal. I've been doing this for some 6, 7, 8 years. And somebody asked me the other day, they said, what do you have to show for it? Although I do have a larger portfolio, at the end of the day, I don't have anything to show for it. All I have is the trade, and that is about to change. In fact, it has changed. Starting this year, I've been buying these stocks, whether it be PYPY, IWMY, QQQY. Look, I want to take cover call profits, put them into monthly dividend paying stocks, generating a passive income flow. YMAX hit my radar because I had already invested in some of the single stock YMAX funds. Now, I'm not going to profess to be an expert here, but I know enough. Probably enough to get in trouble, but let's talk about it. The YMAX funds use the cover call strategy, and I think they use weekly covered calls, monthly covered calls, and they have a couple funds. This is what we're going to try to break down. We have these single stock funds. A lot of you out there probably know about Coinbase, Tesla, Microsoft, PayPal. What YieldMax has done, they're taking options and they're creating a synthetic trade where they simulate stock ownership. They have some treasury notes that act as collateral. And what they do is they write covered calls, near-term covered calls, to distribute the dividend. Now, it's all based on the underlying and the volatility of the underlying. So, for example, they have a JP Morgan YieldMax fund, and it doesn't make that much money. because they're writing covered calls on JP Morgan, which doesn't have that much volatility. Now, the other ones like Coinbase and Tesla, well, they do. And you'll see that Coinbase, being the underlying stock, Coinbase, they don't actually own Coinbase. They create a synthetic trade which they simulate stock ownership, and then they sell covered calls against it. Well, when you use a higher volatile stock, you're going to get tremendous option movement. And in the case of Coinbase, where it has gone literally from 120 bucks to 280 in what seems to be a month, you're getting tremendous amount of volatility. And the YMAX single stock fund for this is Coney. Coney is the ETF that tracks Coinbase. And again, there's a room of option traders, and they're simulating stock ownership in Coinbase, and they're selling options. And check these returns. Last month, they paid $2.70. Do you see that? That's insane. And this is why I said this is the new age of dividend-paying stocks. They're using options, okay? $2.70, $1.60, $1, $2.60. I got into Coney last year, so I have actually benefited from this tremendous run-up because Coinbase has moved. See, Tesla and Tesla being the YMAX fund that tracks Tesla, well, it's not doing so good because the underlying stock, Tesla, is getting beaten down. So all those people that bought into Tesla, well, they're hurting. And they're always complaining because the underlying stock is falling, so Tesla falls. So with that said, if you were to go to the YMAX website, you'll see that they have all of these funds. You can see at the top there, they have all these covered call ETFs that track stock. They call that a single stock fund. It is what it is. Just as I explained, you have the Tesla YMAX fund, which is called Tesla, and it follows Tesla. This is fun, right? Because a lot of people like this idea where they will take a stock and what they'll do, they'll put some treasury notes in there for collateral, and that's a lot of money. And then what they do is they take their cash and they buy options to simulate ownership of the shares. Now that they've simulated ownership of the shares, they can write covered calls against it. And because they're writing weekly and monthly covered calls, they're collecting massive near-term covered call premiums. That goes back to the shareholders, people like you and me. Now, they have done something that ups the game. Do you see in the middle of the screen there? They're called YMAX Funds of Funds. Well, here's the deal. You can see YMAX there. What YMAX does, it takes about 13 different single stocks, like I just showed you, Tesla, Coney, and it puts it into this fund. So this fund, for the most part, has all of these single stock ETFs in there. And what it does is it collects the average of all of them. So basically, that's why you're getting a very consistent 52 cents to 56 cents monthly per share distribution. And because it's holding the funds inside of the funds, it has a net asset value. And the stock is actually going higher. Let me show you YMAX's chart. This is amazing. Last month it paid 56 cents. The month before 53 cents. And I believe this month is going to be 52 cents. Now here's the deal. It's going to cost you about 21 bucks to get involved. You have to know what a dividend paying stock is invested in to create the dividend. Okay? So that's why I wanted to talk to you about the YMAX single stock funds, because that's how YMAX started. They basically took this fabulous idea where they track a stock like Apple, Microsoft, Nvidia, Coinbase, and you're able to invest in that movement. You're able to invest in the covered calls that they write based on that stock. So that's sort of cool, right? Well, then they upped the game and they created this fund, which I absolutely love. And that's why I went ahead and did the YMAX as a dividend tree plant. Because now with 1,500 shares of YMAX, YMAX is diversified. And the beautiful thing about this one is it'll have all those single stock funds in it. And what they'll do is monthly, they'll readjust. So if something like Tesla is getting kicked in the ribs, they'll actually readjust. So Tesla is a smaller portion of the portfolio. And if say the Apple or Apple is moving higher, they can move this around. And that makes it exciting. I truly believe the YMAX fund is going to generate that 50 cents every single month, every single share. I'm using YMAX to generate some $700 with my dividend tree right now. And what I want to do is, as I write covered calls, I want to take that profit and move it into things like YMAX. Because now you go from a semi-passive investment strategy to a passive one. We go from the trade mindset to the wealth mindset. And here's the deal. If you invest in dividend-paying stocks, you create a passive income stream where you actually have your money working for you. See, that's what I want. See, I make all this money on cover call writing. I want to take those profits and have my little money warriors going out there making me more money. So here's the deal. I want you to go and research. First of all, I want you to research YMAX. Now look, there are many companies starting to do this, okay? YMAX is the first one. And this guy right here, he's pretty good. Understand they have the single covered call fund where they use a stock and they generate those covered calls. Now they're creating funds of funds which they will add all of the single stocks in. And then you see others. And I'll tell you what, Utley, which what I call the YMAX Ultra, it is actually paying $1 per share because it uses a basket of stocks, some 15 to 30 different stocks to write covered calls on to generate fat dividends. For most of you that know ETFs and closed-end funds that use the buy-write covered call strategy, you know that they typically use indexes. This one, which is, again, I'm calling it Utley, we have not gotten to 1,500 shares yet. I only have 360 right now. We only started 2 days ago. That's how my covered call profits are a cash printing machine. We're going to go ahead and keep buying Utley because Utley is going to write covered calls on all those stocks that have high volatility. And I love it because you got guys like this who are pros in the business and they're going to manage that. And I'll tell you what, I'm going to grow that to 1,500 shares as well. And we're looking to invest more and more into these new age ETFs, whether it be YMAX or Defiant or any other, where they use options, because that's where the money's made. Option premiums are hella huge, and you're able to generate all that monthly dividend premium. Now, here's the deal. Before I let you go, I want you to learn about the YMAX and the different funds they have. What I want you to understand is net asset value, the NAV. You'll hear everybody talk about the NAV. So let me be real brief on the NAV. Imagine I'm selling a box with value in it. That box has value. And as the value moves up and down, it has value. It's called the net asset value of that box. Well, a lot of these new age ETFs, and by the way, I'm just going to keep this straight talk style. Well, they're simulating stock ownership. So what that means is that they don't own the box, right? They don't own the box that has value in it. They just own cash. And what they do is they will simulate stock ownership. So an ETF that actually uses stocks, those stocks are a part of the net asset value. With YMAX, not so much. They don't have the stocks because they simulate stock ownership. So what happens is when a stock is trading at $17 and they distribute a $1 dividend, well, what's going to happen? On X day, it's going to fall $1 and the stock itself is going to fall to $16. And this is repeat and rinse, repeat and rinse. So you need to understand about net asset value because if you pull up a chart of, say, QQQY, this is a perfect example. QQQY has no assets. They just have cash. They do daily options on the QQQ. Well, look what happens. And this is the scary part. Every single time they have a distribution, it falls. And then it trades and then it falls. So you have to understand net asset value. Now, at the end of the day, I'm really hoping Defiance gets their act together and figures out how to get some net asset value in these things. Otherwise, what they're going to do is reverse split this sucker every chance they get. And yeah, the share price will go from $15 to $30, but it's just going to do the same thing. It'll be up here, they'll distribute $1 and it'll be 29. And this is just something that is happening. So you have to understand that. That's what I'm hoping Defiance figures out. They're going to have to create some net asset value because these are options and they don't hold anything in that box we just talked about, only cash. So I want you to go out, get your homework before you invest in any of these. You're going to see huge dividend yields. In fact, you're going to see stuff that's like 70% cash on cash, and you are absolutely going to salivate. But if you don't know how they generate their dividend, you are probably going to be disappointed when you realize that the stock might do something like QQQY. Every single time it distributes a dividend, the stock goes down. So please get your education. But here's another thing I want to plead with you. I want you to start doing it. Create your dividend tree. At the end of the day, man, we have to have a legacy. And that legacy has to be one where we have passive income. And we take that passive income, and that's what we spend on things in life. We don't spend our capital, right? What we do is we spend the money that was generated from the capital through covered call writing and those profits, and then we spend the money from our dividend stocks. See, that's how the rich stays rich. Look, I want you to have the mindset of being wealthy. If you like anything you hear today, do me a favor and subscribe to the channel. I'm going to be coming back more and more talking about these dividend stocks, but here's the deal. I'm investing in them and I own them, and I'm going to tell you all about them. So look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Hey, look, go to cptdashboard.com. cptdashboard.com. I have a membership, and my members see all of this. Did you like this? Well, here's the deal. I write covered calls and sell cash secure puts. I generate premiums, premium profit. I take that premium profit and I buy things like YMAX. I show all of my members all of that. It's about going from a trade mindset to a wealth mindset. And I'll tell you what, I got a one free offer waiting for you. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.